Okay, let's just jump right into this because the price action we're seeing right now, today, February 4th, 2026, I mean, it is the absolute definition of a gut check for investors.
Oh, it really is a classic gut check.
If you're brave enough to even look at your screen this morning, you're seeing shares of AMD down, what is it, at 6%?
6% in Frankfurt trading, yeah. And the headlines are just screaming about weak guidance. People are getting nervous.
You can just feel that sense of, uh-oh, is the party over?
It's that classic, almost knee-jerk reaction. It's all emotion. But if you just zoom out a tiny, tiny bit,
Right.
literally just look at the year-to-date chart. AMD is still up 13.1% since January 1st.
So before everyone hits the panic button, we have to ask the real question. Is this 6% drop a genuine warning that something's cracking in the business model?
Or is this the market basically handing you a gift wrapped in panning paper?
Exactly. Because while everyone is fixated on guidance for the next 3 months, there is this massive catalyst just lurking in the background for later this year. We're talking about the MI450 AI accelerator launch.
That is the main event. If you're focusing only on Q1 guidance, you are completely missing the story of 2026.
And look, we're not the only ones seeing this. Christopher Rowland over at Susquehanna, he just reiterated a buy rating.
And he's got a pretty hefty price target on it, right?
A $300 price target. That is a 19% upside from where we are right now, even with today's drop.
So that's the question we're really trying to answer today. Is this a falling knife you should stay away from, or is it the perfect buy-the-dip entry point for the only company legitimately challenging NVIDIA?
Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at AMD.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, so let's try to cut through all the noise. The market sees weak guidance and just immediately hits the sell button. But you've been digging into the actual numbers from the Q4 and full year 2025 report. Does the data really justify this kind of sell-off?
In a word, no, not at all. If you just look at the fundamentals, the market's reaction feels incredibly short-sighted.
Okay.
AMD just posted record results for the fourth quarter and for the full year of 2025. And this wasn't some, barely made it situation or some clever accounting.
Right.
They delivered a positive earnings surprise of over 16%.
Wait, hold on. 16% for a company this size, a 16% earnings surprise is, well, it's huge.
It's massive.
That suggests they're running way more efficiently than anyone on Wall Street thought was possible.
Exactly. It means the operational leverage is really starting to kick in. And they had a revenue surprise of over 6%, too.
So where is that coming from?
We need to look at the engine of this growth. We have to talk about the data center. That is the core battleground.
Of course.
In the third quarter of 2025, so just leading up to this, their data center revenue grew by 90.23% year over year.
90%. That's basically doubling.
Doubling.
That feels like startup speed, not
Yeah.
massive legacy semiconductor company speed.
Precisely. And that tells you the demand for their AI chips is real. It's not hype. It's actual purchase orders.
Yeah.
It's hardware going out the door.
Okay, so the top line is exploding. What else stood out?
The gross margin, another number that really stood out to me, it's sitting at 45.53%.
So why does that specific number, 45.53%, matter so much to the average investor? Why should they care about margins when the stock is tanking?
Because fighting NVIDIA is expensive. It is historically incredibly expensive. It costs billions of dollars in R&D just to design these chips, to get them made, to build out the whole software stack.
Right.
A 45% margin means AMD is generating enough profit from every single sale to self-fund that war. It gives them the cash flow to be aggressive without having to take on a bunch of dangerous debt.
And they have the cash.
They do. They generated record free cash flow in 2025. This is not a company that's running on fumes. They are flush with cash, and they are ready to scale up.
So they have the war chest. And from what I saw, management isn't being shy about their targets. They put out a pretty bold number for future growth that kind of contradicts what analysts are saying.
They did. They're targeting a revenue compound annual growth rate, a KGR of greater than 35%.
35%.
Now, here's where it gets really interesting. Wall Street analysts, they're currently modeling for about 30% growth in 2026.
So management thinks they can grow faster than Wall Street thinks they can.
Exactly. And that gap, that 5% difference, that's where the alpha is. It suggests Wall Street is underestimating something.
That they're being too conservative.
Right. And I think what they're underestimating is the product ramp that's coming later this year.
Which brings us right back to the hardware. Let's talk about the arsenal. We all know NVIDIA is the king of the hill. But AMD isn't showing up to a gunfight with a knife. They have the MI300X and soon the MI450. What makes these chips special? Why would a company buy these instead of just waiting for NVIDIA?
It really comes down to two things, utility and cost. The MI300X hybrid APU, I mean, it's a beast. It offers 192 gigabytes of HBM3 memory.
Okay, stop there. HBM3 memory, we hear this term all the time. Can you just break down why memory is the big bottleneck here?
Yeah, of course. In the world of AI, memory is, it's everything. Because these large language models are just massive. Think of the model like a gigantic encyclopedia.
Okay.
If you can fit more of that encyclopedia onto the chip's own memory, onto its desk, basically, you can read it almost instantly.
Yeah.
If the memory is too small, you have to keep walking over to the filing cabinet, that's the external storage, to get the next page. And that constant swapping of data just slows everything down.
So the MI300X is like having a gigantic desk so you don't have to keep getting up.
That's a perfect analogy. AMD is offering a huge desk, and that gives a massive performance advantage, especially for inference.
Got it. And the second part was cost.
Right. The total cost of ownership angle. AMD is positioning itself as the cost-efficient alternative. For the hyperscalers, you know, the Googles, Microsofts, Amazons of the world, they're buying tens of thousands of these chips. Saving 20 or 30% on hardware adds up to billions of dollars.
But the hardware has never really been the main problem for AMD, has it?
No.
It's always been the software. NVIDIA has CUDA, and developers are, well, they're addicted to it. It's like the iPhone ecosystem. Once you're in, you don't leave.
That has always been the moat, but that moat is starting to dry up, or at least AMD is building a pretty solid bridge over it.
With ROCm.
Exactly. Their ROCm platform, which is open source. NVIDIA's CUD is proprietary. It's a walled garden. ROCm is open.
And why does that matter to a big cloud provider? I mean, do they really care about open source ideals?
They care about one thing, vendor lock-in. If you build your entire infrastructure on CUDA, you are owned by NVIDIA forever. You have to pay whatever price they decide to set.
And big tech companies hate that.
They hate being dependent on a single supplier. It's a huge strategic risk. So open source software like ROCm gives them flexibility. It reduces that stickiness of NVIDIA, which makes AMD a strategic necessity for these companies, not just a cheaper option.
The second source to keep NVIDIA honest.
That's it. Exactly.
Okay, so they have the GPU side covered. But here's where I had a bit of an aha moment looking through all this. We tend to think of the AI boom as just a GPU story, but there's this twist here that involves CPUs, the traditional processors. Can you explain the agentic AI angle?
This is a fascinating and I think totally overlooked part of the story. We're moving from generative AI, where you ask a chatbot a question and it spits out an answer, to agentic AI. This is where an AI agent actually performs a series of tasks to achieve a goal.
So instead of just writing me a poem, it's booking me a flight, putting it on my calendar, and then emailing my boss that I'll be away.
Correct. It's taking action in the real world. And here is the technical kicker that people miss. Every single time the GPU generates a token, a little piece of information, it triggers multiple tasks that the CPU has to handle.
Like what?
Database lookups, network routing, logic processing, security checks, all of that stuff.
So the GPU is like the brain having the idea, but the CPU is the hands actually doing the work.
That's a great way to put it. So as AI gets smarter and more agentic, the demand for general purpose compute, specifically CPUs, actually goes up. You need a powerful CPU to manage all these agents.
So the AI boom literally drags the CPU market up with it.
It does, and AMD is crushing it there with their EPYC processors, especially the new Turin chip. They are gaining share in the enterprise data center. So when you buy AMD, you're not just betting on the GPU catch-up trade.
Right.
You're also betting on the core infrastructure needed for all these AI agents to actually function.
That is a really crucial distinction. It's like a two-pronged attack.
Yeah.
But okay, let's go back to the elephant in the room. The reason the stock is down today. We talked about the bearish news. Weak revenue guidance for the coming quarter.
Yeah.
And you mentioned sector rotation. It just seems like investors are tired of the volatility and they're moving money into safer, more boring stocks.
That is definitely part of it. There is a general risk-off mood in the market right now, but let's look at the bull rebuttal to that guidance miss. A lot of analysts believe this guidance is tactical.
Tactical? What do you mean? They're sandbagging.
Essentially. I mean, think about it. Management knows the MI450 launch is coming later in 2026.
Okay.
That is going to be a chaotic, high-growth period. It makes a lot of sense to be conservative right now. It's better to set the bar low and then easily jump over it than to set it high and drip.
Under promise, over deliver.
Exactly. The guidance miss doesn't look like a broken business model. It looks more like a pause before the next big sprint.
And that sprint is the MI450. What are the expectations there?
We are looking at potential triple-digit growth in specific quarters once that thing really starts to ramp. The industry chatter is that if the MI450 can match NVIDIA's performance but at a lower price point, they will, and this is a direct quote from the analysis, absolutely 100% take share.
Absolutely 100%. That's some strong language.
It's very confident, and that is why you see this buy-the-dip sentiment from the bulls. The sell-off today feels psychological. It's driven by fear. But the fundamentals, record cash flow, 90% growth in the key sector, a huge new product launch coming, those are facts.
Okay, but we have to be balanced here. We can't just drink the Kool-Aid. What are the real risks? What would keep you up at night with this trade?
The primary risk is still that ecosystem lock-in we talked about with CBA.
Right.
Can AMD's cost advantage actually break the CA habit?
Right.
Developers are, efficient. They're not lazy. They're efficient. They know CA. Learning a new platform, even if it's open source, takes time and it takes effort. If RCM is buggy or just good enough, it might not be a strong enough reason to switch.
So NVIDIA's moat might be even deeper than we think.
It could be. And the secondary risk is just the macroeconomy. Semiconductor cyclicality is a real thing. If the global economy slows down, companies cut their IT budgets. Does that 35% growth target just vanish if a recession hits? Absolutely. Chips are historically a boom and bust cycle. We're in a boom, but busts do happen.
Fair enough. But let's weigh that against the upside. We have a $300 price target from Susquehanna. We have the agentic AI tailwind. How do you score this opportunity?
When you look at the risk-reward ratio, especially after a 6% pullback like today, I'm giving this a bullish score of 7.5 out of 10.
7.5, that's pretty solid.
It is. You have a profitable, cash-rich challenger in a market that's projected to be worth over $1 trillion by 2030. They have the product, they have the cash, and they have the opportunity. The only real question is execution.
So let's wrap this all up for the listener.
Yeah.
What's the elevator pitch here?
The pitch is this. AMD is the only credible alternative to NVIDIA. Full stop. They are profitable, they are growing their core data center business at 90%. The stock is down today on short-term guidance noise, but the real story is the MI450 launch coming later this year.
And what's the time frame on a trade like this?
I would frame this as a multi-quarter swing trade. You're essentially buying the fear right now to sell the euphoria of the launch later in 2026.
I love that. Buy the fear, sell the euphoria.
Yeah.
And I want to leave everyone with just one final thought to mull over. We talked about agentic AI, but really think about what that means. If the future of AI isn't just chatting with a bot, but having millions of autonomous agents running 24/7 doing work for us, the amount of pure processing power, not just AI inference, but good old-fashioned CPU logic that's needed to run that world is just mind-boggling. Are we underestimating how much traditional compute we actually need? Because if we are, AMD's EPYC line might be the sleeper hit of the entire decade.
That is a massive concept to consider. It changes the entire demand equation.
Yeah, it really does. Look, if you found this breakdown helpful, make sure you are subscribed so you don't miss the next one. Drop a comment below. Are you buying this dip, or is NVIDIA the only game in town for you? We want to hear your take.
Thanks for listening.
See you next time.